Hey everyone, Amazon's going to report fiscal year 2023 first quarter earnings on Thursday, April 27 after the markets closed. So what I wanted to do in this video is give an overview of what Amazon stock investors should look for when Amazon reports first quarter 2023 earnings. Starting with management guidance here, management told us that in the first quarter of 2023, look for net sales between 121 and 126 billion, or to grow between 4 and 8% compared with the first quarter last year. Now, Amazon gave this outlook roughly 3 months ago in February. Operating income, they said, is expected to be between 0 and 4 billion. That's compared to 3.7 billion in the first quarter of 2022. So at the midpoint of this guidance, let's say 2 billion, that's going to be a huge decrease from the same operating income last year. So that's already incorporated into what the market is expecting from Amazon, right? Because management told us this is what to expect. So Wall Street pretty much expects this range plus or minus, a couple of 100 million or so. Now, after Amazon management gave that guidance in February, the stock price fell considerably. In the next month, Amazon stock price fell from about $110 per share all the way down close to $90 per share. However, since then, Amazon's stock price has caught a bid higher and is now trading almost at the price it was before the company announced these earnings, which disappointed the market. Amazon's fourth quarter earnings and guidance disappointed the market. That's why the stock price fell. But now expectations are pretty high for Amazon's first quarter 2023 earnings because the stock price has already ran up considerably heading into the earnings report. When this happens, it usually means that investors are pricing in a good report, a better than expected report. Better than expected, what I mean by that is better than what management forecasted. So better than the midpoint. Let's say if growth at 6%, operating income at 2 billion, it looks like Wall Street is expecting maybe a little bit higher than that, on the higher end of that range instead of on the bottom end of that range. So now what that tells me as an investor is if Amazon reports earnings that are, less than 6% growth or less than 2 billion in operating income, the stock price is likely to fall in response unless in conjunction with that lower than expected earnings, Amazon gives a better outlook for the next quarter. So these are the factors that are likely to move the stock price, or I should say, some of the factors that are likely to move Amazon's stock price after it reports first quarter 2023 earnings. Let me discuss a few more that you're not going to want to miss out. So one of the big factors that Amazon has faced and why the stock price has been under pressure over the last 6 months to a year is the expense growth. The company overinvested during the pandemic and now expenses are through the roof. You could see here in the 3 months ended December 31, total operating expenses jumped year over year from 134 billion to 146 billion, a $13 billion jump in total operating expenses. If you look year over year, in the 12 months ended December 31st, Amazon's total operating expenses jumped from 445 billion to 502 billion dollars. That's right. Amazon alone spent 502 billion dollars in 1 year. That's incredible, and that was about 60 or 57 billion dollars higher than the year before. So Amazon increased spending by 57 billion dollars year over year. Now, if you thought you had a spending problem and you were spending too much money, just look at Amazon. It'll make you feel a little bit better about your own management of your own budget. as a result of that rise in operating expenses, Amazon's operating profit margin has consecutively been decreasing. You look at the operating profit margin in the trailing 12 months as a percentage of worldwide net sales, which I have highlighted here, has been falling from 6.2% in the third quarter of 2021 all the way down to 2.4% in the fourth quarter of 2022. And it's fallen at every quarter since that quarter highlighted earlier. So consistently decreasing here. And that raises the question from investors, hey, when is this going to stop? When is this going to end? How low is this going to go? Because this just keeps falling, right? So it's a streak. And whenever you have this streak, it spooks investors because they think this isn't going to end. This is just going to keep going. And analysts tend to have this habit of just extrapolating what's been happening to continue happening. So if they see this streak, they say, well, okay, it's going to just continue. If they see the other way around of increases, they say, okay, well, that's going to continue. So analysts tend to forecast this outward, and that's troubling because this is not in the positive direction for Amazon. So if they can turn this around or even just keep it flat, if it's just 2.4%, that's going to be a boost. That could be a catalyst that lifts Amazon's stock price because it's been streaking downward. So a change in the direction would be a big boost for Amazon. So keep an eye on this margin here. So Amazon breaks out its segments between North America, International, and AWS. And I wanted to highlight that the North America segment, which includes its online sales, e-commerce sales in the US and in Canada and others, it's not a profit. It hasn't been a profitable business since the third quarter of 2021. It's been losing money consistently. You see here 0.2% operating margin, negative 2.3, negative zero point 0.8, negative zero point 0.5, negative zero point 0.3. So it's been losing money for several quarters, uh, five in a row. And so this is another area. If it can turn it around, which it's been moving in the right direction, if this can turn positive, again, that would be a big positive to Amazon stock. Internationally is the same story, but the losses are much worse. Negative 3.1, negative 4.4, negative 4.5, negative 6.5, negative 8.9. Huge losses in online sales internationally. If this can turn around, that would be a big improvement. Or if Amazon could make an announcement suggesting they're going to slow their pace of growth internationally in e-commerce, that would be a boost because it's such a money-losing segment. And then finally, AWS. This is the breadwinner for the company. Operating profit margin, trailing 12-month AWS, very strong, close to 30% operating profit margins in this business. This is the business that funds the entire Amazon company. Without AWS, the company would be a losing business. It would not be profitable on the bottom line, but AWS is keeping the company afloat. However, this segment's growth is slowing. It went from 40% growth to 37 to 33 to 28 to 20, and all indications point to a slower growth in the current quarter, likely in the teens. And also that could pressure operating margin because the company has said they're not focused on profitability in this business right now. They're trying to help their clients optimize their usage because enterprises are trying to streamline their costs too. They're trying to lower expenses. One of the areas they're lowering expenses is in AWS spending. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Another key area to look for in Amazon's upcoming first quarter 2023 earnings is its advertising services business. This is an area of strength for Amazon. It's built this business to a level where it generated 11.5 billion in ad revenue in its most recent quarter. and that's been growing robustly, 50%, 30, 20, 20, 30, 20. So this is an area of strong growth, and this is a lucrative business. This is highly profitable. Showing advertisements is a very profitable business, as evidenced by, you can see Google, you can see Facebook, how generous their profit margins are. So this is an area, if Amazon can report another 20% increase year over year, that's going to be a boost to Amazon's stock price in after the quarterly results come out. So I hope what you're realizing from these figures is revenue growth is not all the same for Amazon. It depends where the revenue growth is coming from. If the growth is coming from e-commerce, investors are not thrilled about that because it's losing money. I showed you the segment 5 quarters in a row losing money. But if revenue growth is coming from AWS, now you're talking. Now that's getting investors excited because that's a business with 30% operating profit margins. And investors like profits. It's not just growth that they're looking for. They're looking for profitable growth. And AWS gives investors the best bang for their buck in terms of profitable growth. The final thing I'll talk about is Amazon's expenses. Very good news here. If you look at worldwide shipping costs in its most recent quarter, only increased by 4%. And you look back at shipping cost growth, look at the big increase, 20%, 10%, 14%, 9%, 10%. This is an area of huge costs for Amazon. They're spending 18 billion, 23 billion, 19 billion, 19.9 billion, 24.7 billion. So this is a significant expense for Amazon, right? It's expensive to deliver those packages to you. It's very expensive. The good news is that the growth of these costs have slowed, right? They've, from double digits down to just 4%, and that's despite the fact that unit growth increased by 8%. So they shipped out 8% more units, but the costs only went up by 4%, less than the amount they shipped. That's very good news for Amazon stock investors. If that trend continues, that's going to be a big catalyst upward for Amazon stock price. Here's another thing I do want to see is a smaller employee count. Amazon hired a ton of employees to ramp up capacity during the pandemic. They jumped to 1.622 million employees. They decreased that by 100,000, and then that increased again, which I was disappointed to see, but it fell again to 1.54 million. I want to see that drop below 1.5 million if they can manage that, to decrease that figure, because they've just got too many employees. I mean, 1.54 million is just too many. You've got to bring that number down, even if that means slower sales growth, slower shipping times. You got to just do it because these costs are getting out of control. It's bringing down operating income, and it's just not worth the effort to make the shipping time that much better or increase sales. Just sacrifice that growth for better margins. Okay, so that's all I've got for this video on Amazon's first quarter 2023 earnings and what to expect. Among those several factors you can look to, where and what factors to expect and which ones are going to boost Amazon's stock price. Thank you so much for watching. I hope I'll see you again soon for another one of my videos.